Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. The speculation surrounding the Iraqi dinar and its potential revaluation has been a long-standing topic of interest among currency investors. The belief that the currency could significantly appreciate in value has prompted discussions about various scenarios in which this might occur. One such scenario is the possibility of the Iraqi dinar appearing on the Forex market with a new rate, potentially around the end of a trading week, specifically Friday or Sunday night. The anticipation for this event is high among investors who closely follow currency trends and the mechanisms of the Forex market. To understand the context of these speculations, it is essential first to grasp the fundamental aspects of the Iraqi dinar itself. The Iraqi dinar, IQD, is the official currency of Iraq, issued by the Central Bank of Iraq, CBI. Over the years, enabling participants to buy, sell, and exchange currencies. The market's opening and closing times align with major financial centers' business hours around the world, including London, New York, Tokyo, and Sydney. As such, the Forex market is active from Sunday evening, Eastern Time, when trading starts in Sydney, Australia, to Friday afternoon when trading ends in New York. This continuous trading schedule allows for nearly 24-hour market access, with the exception of weekends when the market is closed for about 48 hours to allow for account reconciliation and other back-office operations. The closing of the Forex market over the weekend, typically from 5 p.m. Eastern Time on Friday until 5 p.m. on Sunday, provides a natural pause for financial institutions and traders. During this time, the market is essentially offline, and currency prices are not actively traded. This period is used for maintenance, account reconciliation, and preparation for the upcoming trading week. For currency traders, the weekend closure means that there is no opportunity to trade in the open market, and any major events occurring during the weekend may only be reflected in currency prices once the market reopens. This change would then be reflected in the Forex market once trading resumes. For example, if a new rate were to be implemented over the weekend, the market would have a fresh starting point for trading on Sunday night, potentially leading to a surge in trading activity. The reasoning behind this timing could be related to minimizing market disruptions by introducing the change when the market is closed, thereby allowing traders to prepare for the adjustment before the market resumes. There is historical precedence for currency revaluations occurring during times when markets are closed, often to prevent speculative trading and ensure that the adjustment occurs smoothly. By implementing a new rate when the Forex market is offline, central banks can better manage the announcement and execution of such a change. In the case of the Iraqi dinar, proponents of the revaluation theory believe that the weekend closure offers an ideal window to enact a rate change without the immediate pressure of active trading. When the Forex market reopens, traders would then adjust their positions based on the newly announced rate, potentially leading to significant market movements. The speculation surrounding the timing of a potential revaluation is fueled by various factors, such as changes in monetary policy or budget allocations, that could signal a shift towards a stronger currency. While these signals can generate interest and anticipation among investors, a revalued dinar could increase purchasing power for Iraqi citizens, reduce the cost of imports, and potentially lower inflation rates. It could also serve as a signal to the international community that Iraq's economy is on a more stable footing, which could attract foreign investment and boost economic growth. However, there are risks associated with revaluing a currency, such as making exports more expensive and potentially harming the competitiveness of domestic industries. Investors who have accumulated large amounts of Iraqi dinar in anticipation of a revaluation stand to benefit significantly if the currency's value increases. Many of these investors believe that the dinar is undervalued and that revaluation would bring its exchange rate closer to a level that reflects Iraq's economic potential. The speculation surrounding the dinar has even led to the emergence of a niche market for dinar trading, where investors can buy and sell the currency in anticipation of future gains. Some view the dinar investment as a form of high-risk speculation rather than a sound investment strategy. These skeptics point out that while Iraq may have economic potential, there are still significant challenges facing the country, including political instability, corruption, and the need for substantial infrastructure development. From this perspective, the idea of a dramatic revaluation may be overly optimistic, and investors should be cautious about expecting significant gains. The role of central banks and financial authorities in currency revaluation is also a crucial consideration. The Central Bank of Iraq, CBI, like other central banks, has the authority to determine the exchange rate policy for the national currency. The CBI may choose to maintain a fixed or pegged exchange rate, foreign exchange reserves, and trade balances, as well as strategic considerations related to Iraq's economic recovery and development. The discussion about the potential for a Forex market revaluation of the Iraqi dinar also involves the technical aspects of trading on the Forex. Forex trading is characterized by high liquidity and fast-paced transactions, with prices changing rapidly in response to economic data, geopolitical events, and market sentiment. When a major currency revaluation is anticipated, traders may position themselves in advance to take advantage of potential price movements. This positioning can lead to increased volatility, especially during times when the market is reopening after a closure, such as on Sunday nights. In anticipation of such an event, traders might look for signals that could indicate a forthcoming change in the currency's value. These signals could include news reports, government announcements, or changes in trading volume. If a revaluation is indeed on the horizon, it would likely attract significant attention from traders and financial analysts, who would assess the implications for currency pairs involving the Iraqi dinar. For example, traders might speculate on the IQD/USD pair, where the value of the dinar is compared against the US dollar, or other currency pairs where the dinar could potentially appreciate. Despite the excitement and speculation surrounding a possible revaluation, it is important for investors to approach the situation with a realistic understanding of the risks involved. Currency revaluation is not a common occurrence, and even when it happens, the outcomes can vary widely depending on the specific circumstances. The factors influencing a currency's value are complex, involving both domestic and international considerations. As such, while the prospect of revaluation may generate interest, it should not be assumed to be a certainty. In summary, the speculation that the Iraqi dinar could appear on the Forex market with a new rate after the weekend closure is driven by a combination of historical context, market dynamics, and economic indicators. The Forex market's structure, which involves a weekend shutdown, provides a natural window for implementing significant changes in exchange rates. However, the actual occurrence of a revaluation would depend on various factors, including the decisions of the Central Bank of Iraq. Thanks for tuning into IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.